Welcome to Nasdaq TradeTalks, where we meet the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Mary Gooneratne, co-founder of Loopscale, Manish Dutta, co-founder and CEO of Alphaledger, and Michael Repetný, co-founder and CEO of Marinade. Marinade Labs, excuse me. We're here to discuss the potential of blockchain to support complex financial operations and create a more inclusive financial landscape by leveraging the Solana network. It is great to have all of you with us and to be able to experience the ecosystem. Let's go around the horn first, Mary. I want to start with you. Give us an overview of Loopscale, where you sit within the blockchain ecosystem.
Yes, so Loopscale is a credit platform for the digital economy. We use an order book architecture to power lending against different types of digital assets like stablecoins, tokenized real-world assets, DeFi positions. We've facilitated over $500 million of borrowing volume, and we're built on Solana. And so we're focused on serving both a kind of DeFi retail audience as well as an institutional audience.
All right, and Manish, Alphaledger.
Yeah, so we are focused on bridging the gap between traditional finance and DeFi. Having started in the traditional world for a long time, I was at PIMCO for 20 years. Using that knowledge, we have started to tokenize municipal debt. We were the first ones to really do it in the country. Having pioneered that, our focus really is to see how we can bring all asset classes in a funds ecosystem and ensure that there is access for a lot more folks than it is today. And we're building on Solana now.
Yeah, and Marinade Labs, Michael.
Yeah, thank you. So in a distributed, decentralized systems like Solana, like blockchains, staking is the way how you secure the transactions and secure the network and validate it. And that's where Marinade comes in. So Marinade is, you can think of it like Expedia for Solana staking, where it tries to connect the Solana holders with the best performing validators on chain, making it more secure, robust, decentralized than ever. We've been around since 21, and currently Marinade manages over $2 billion worth of staked Solana, making the network more robust.
Let's talk about the digital asset environment overall, Michael. We'll kick that off with you. It feels as if the conversations around it have started to mature when we're thinking about integration and user experience, and why that topic of real world assets, bringing it on chain, really has, it catapulted. There's been a lot of momentum around this, I would say, the past 12 to 18 months.
Absolutely, absolutely. So just if you look around 12 months ago, if you look at the landscape of the decentralized finance applications on Solana, the TVL back at that time would be at $1 billion. Today, we're looking 10x. So we're looking really at $10 billion worth of assets in the value locked on decentralized finance applications on Solana. That's one. I would call it that Solana is really unique in its position that it's such a low fee, high throughput network out there that make it very unique. Like, it is not the first blockchain, it will not be the last blockchain, but it is the only blockchain right now that feels like magic almost. You interact with it, you transact. It can do thousands of transactions, yet it's operated on 1,400 computers across the world in more than 30 countries, more than 100 cities. So you can see it's a distributed system that allows anyone, makes it very accessible, makes it very open to anyone transact and send thousands of transactions through it. So I think that's why we are seeing right now that institutions are watching the space, because it can be something for them to take advantage of.
Yeah, and Manish, Michael brings up a good point here about the network. It's not the only one, and it will continue to evolve, but isn't that the essence of the markets anyway?
Yeah, no, absolutely. Look, I mean, prior to Solana, we were on a permission network, and I think part of the reasons we sort of moved on to Solana was the proof of history. As you know, like in traditional finance, it's important to track when the trade was executed, where it is today in life cycle. So I think part of that really was the value proposition of Solana, including the speed. I think things will obviously change over times. More blockchains will come and interact, but I think in terms of speed, decentralization, tracking the assets, I think Solana is purpose-built.
Yeah, and Mary, how do you feel about that as well? Again, it feels as if it's maturing. We're starting to see a lot of similarities, or recognizing terms that you associate with TradFi.
Yeah, to Michael's point, I think over a year ago when we were working on different L1 networks, you were kind of getting the values of blockchain, whether that's decentralization, permissionlessness, speed, but it came at a sacrifice of latency and cost. And now with the adoption of blockchains like Solana, we're seeing that you can kind of have both of the best worlds and have the latency and cost and efficiency that you get in traditional finance systems while preserving the benefits of having a public and decentralized system.
What about, when we think about creating a more inclusive financial landscape? I think sometimes inclusive and accessibility, those terms tend to be thrown around a lot, and they have a number of different meanings. When you think about a more inclusive financial landscape, how is blockchain facilitating that?
Yeah, I think you can think about it both in terms of the financial participants and who is buying and investing in all sorts of assets, but I think another important vector in terms of permissionlessness and access is the actual developers and protocols building on these systems. So in traditional value exchange systems, a lot of these different companies will have these siloed systems that you can't necessarily compose with. But one of kind of the big benefits of building on a public blockchain is you can take an asset like Marinade Soul that one company has built and compose with it and use it in a loan on a protocol like Loopscale. And so that permissionlessness and accessibility that allows all these different companies to build upon the work of each other as opposed to operating more isolated.
Yeah. Well, Manish, when we think about accessibility and inclusiveness in terms of the average investor or growing micro economies, alternative forms of capital formation, is blockchain technology helping to facilitate that as well, where it truly is inclusive and provides accessibility and the ability to grow economies?
Yeah, no, definitely. Look, I mean, I think the challenge with the traditional financial models today is the operational issues right today, right? So as we think of blockchain, public blockchain, when you start to originate an underlying asset as a tokenized asset, it starts to streamline the operational issues that exist in the market today. And if you streamline those challenges, you can start to create an operational capability and access capability for everybody that's on public blockchain. I think that component is sort of lost today in the market, which is the need for tokenization at the point of origination, which streamlines the access and clearly the operational efficiency that's really needed by the large-scale institutions.
Yeah, and Michael, Mary brought up a good point about you can't operate in silos particularly. I mean, it's just not a function of blockchain. You had mentioned also that heightened security and compliance is one of the features of it as well. Tell us more about that. When you say security, is that like the cybersecurity perspective, or when you think about security and compliance in the traditional sense, how is blockchain improving upon that?
Absolutely. So if you think about what's powering Solana, it's literally those 1,400 computers across the world in all different countries. So as an essence to it, you don't have one centralized entity that you would need to trust. So it's a trustless environment where everybody can come in and can verify by themselves. They don't need to trust any other entity out there. So from that perspective, it's allow anyone to be able to participate in the ecosystem. Anyone is able, you only need to have basically the connection to the internet, and anywhere in the world, you are able to access the Solana state completely for free. So it's completely accessible, and you can interact with it, and it costs less than a penny to send a transaction over to Solana. So this is, to me, really the closest to the magical experience that you can get from the Web2 world, but put it on a distributed, much more secure, robust, decentralized ecosystem that runs like multiple transactions on top of it.
But does it open the ecosystem up towards vulnerabilities because there is no central system, or because anyone can access it? How do you address?
That depends, and that's a great point. I mean, we are still building out almost this pre-internet era of when we don't have a Netscape even. It's building out the infrastructure. That's how crypto is today. It feels like early 90s, where there was no Explorer even on the internet. We are building out literally the pipes. So it's building out in the open, it's very rough and everything. And together with that, you have the hacks, you have the vulnerabilities around that. That's all part of it because it's part of the learning game, but it's all built in the open. So there is no other way around it than just build through it and make the network more robust, more secure over time, because it's built out there, it's built in all transparency, unlike the traditional systems that are hidden and people really cannot verify their transactions and the systems.
I mean, to Michael's point, I mean, no L1 has been hacked, right? It's only the exchanges, the applications built on top of L1 that have been sort of been taken advantage of. If you look at the traditional finance, you see a lot more hacks today. Like, so you have social security issue challenges. You have folks, credit cards numbers sitting on black sites. So I think, in general, the blockchain ecosystem is much more robust than meets the eye. it's the programming language on top that has to improve. But that's sort of true for all the markets, really.
And I think that's a great point, because I think sometimes we have to exercise patience, right? Yeah. This is well, not relatively, it is a young asset class. Yeah. I mean, think about, fixed income or equities. They've been around, for relative to digital assets. It takes time, and it's still always going to evolve, and that's how you learn from mistakes that have been made. Yeah,
I mean, look, this reminds me of the early 2000 when state-through processing was a big buzzword, and firms were trying to sort of figure out what a computer is and how do you sort of automate paper tickets. And so we are now moving from paper tickets, that's the early part of tokenization. The next step really is the operational efficiency before we get to composable real-world assets, and ultimately high-frequency trading. I think that's where the world is moving, and there's an advantage for early adopters today.
Yeah, I think it's interesting, again, to your point, Mary, about these silos being eradicated, right? And I think that's one of the attractions to operating on blockchain. It's not as if you have all these different proprietary silos that you're working with.
Yeah, and there's also interesting standards that have developed socially in this space that benefit, I think, user security, and that, like the idea of open source programs that let you see exactly what you're doing when you're transacting versus a closed source program or an app you interact with on your phone where you click send or something, you don't really know what's going on under the hood. Whereas with an open source program, you're literally seeing how you would affect the ledger and what transactions are going through. And so those standards that have been kind of set at an ecosystem level improve, I think, security for users.
Yeah, would you say it's almost like a self-regulatory organization, or it just naturally evolved as such?
I think it'll evolve. I mean, if you look at the current regulatory landscape, I mean, it's evolving. I think the new administration certainly is moving in the right direction. They have to be very smart about implementing new policies and procedures. But, given it's a public environment, there are a lot more folks invested in it, so it makes it more secure, and I think it's going to start to create new standards for trading.
Yeah, I also think, Michael, that understanding this is the underlying infrastructure, and it's not just about trading and hedging money, made and lost. That's another sign of it maturing as well. I think, being at the beginning of the infrastructure development is a really unique place to be.
Yeah, absolutely. And I mean, if you look at it and try to compare it to the traditional finance markets, it's only a drop in the ocean right now. If you combine the market caps of all crypto, you would arrive at $3-4 trillion. I mean, that's traded in this very building within a week. So it's a drop in the ocean, but we are getting there. I think we are building this infrastructure that can serve as a rails. And right now, it might be driven, let's face it, it might be driven by speculation these days, mainly. The crypto is driven by speculation. But what it does with all the, be it meme coins, NFTs, all the different applications running on crypto, it really stress tests the system, making sure that today, those are the assets, but tomorrow, this can be private equities, bonds, commodities, stocks, you name it, that can be tokenized and working on a system like Solana that feels the closest to the everyday system we're using around. And it almost doesn't feel like blockchain. I think that's the beauty of it.
Yeah, I mean, think about it. The alternative investment space, digital assets is firmly underneath that umbrella now. So let's get more context behind this. So the three of your companies are on Solana. Do you interact with each other? How does that work? How does the ecosystem work, Mary?
Yeah, so I mean, there are definitely relationships between our protocols, and so the example I used earlier was a real example. So we support using Marinade Sol, which is Marinade's staked Sol product, as collateral on Loopscale. And so that's possible because it is the moving of Marinade Sol is permissionless. And so that's one of the supported assets. And a lot of protocols work together in that way. And we support collateral assets that a lot of other protocols have issued on our platform.
Yeah, and give us more perspective.
I mean, look, we have tokenized over $800 million worth of real-world assets, and we are now trying to see how we can bridge the gap between tokenization of the real-world assets into sort of the crypto-native world, and that's where sort of our conversation really begins with Michael and team, given that we are part of the Solana Incubator Cohort 2. I think it's an exciting time to sort of start to think about bridging the gaps between traditional finance that are being tokenized at origination, and then marrying that to the capabilities of public blockchain and the crypto movement, settlements, custodial capabilities that come onto a public chain.
I think what's interesting with Solana as well, you have Solana Labs, you have Foundation. There are multiple verticals that are supporting this blockchain, I think, in a very intelligent and deliberate way.
Mm-hmm. Yeah, absolutely. I mean, we've been around since 21, and we actually, Marinade came out as a hackathon project done back then by Solana Foundation and Solana Labs. So we felt the support. Actually, Marinade, up until this point, even if it has more than $2 billion worth of staked assets in the protocol, has been completely bootstrapped. So that's been only because there's huge support from the Solana ecosystem, including labs, including foundation, where they try to be helpful, but at the same time, they don't king make. So they make it to the market to decide, and I think that's the beauty of their position, that they know where to stop almost with the support of the ecosystem.
Yeah, and I think it's a good point that you bring up, because let's call this Web 3 versus Web 2. Web 2, you have your intermediaries, right?
Yeah.
That kind of are the kingmakers, if you will.
Yeah.
The part of the ethos behind this is to not have those intermediaries. I think it's really interesting to see how the ecosystem has naturally developed. That's a lot of trust.
Yeah.
That's required to go into that.
It is, and it's like a lot of balance to play out here, because you as Solana, either labs or a foundation, you want to do the most to support the ecosystem, to support the projects, but you need to find the level up to which point you let the market play, you let the market decide.
Right.
So to find the right balance, I think it's been interesting, but we see over time that there are more and more people leaving labs, leaving foundation, and doing projects on the outside. So that's a trend that we've seen recently, and I think it's going to continue. So that the Solana Foundation, its role in the ecosystem, is going to decrease over time as they see fit in the ecosystem projects that can almost take over and make sure that the ecosystem thrives and it continues to operate.
Right. So even if companies within this ecosystem leave and do separate projects, is that a good or bad thing?
Sorry, can you repeat?
Michael had mentioned that some of the ecosystem companies within the ecosystem might leave and take on other projects or operate outside of it. Is that a good or bad thing for the network?
Yeah, I think he was mentioning there's a number of folks at like Labs and Foundation that have gone to build blockchain projects themselves on Solana. And I think ultimately the test of the network is kind of how strong the ecosystem stands on its own. And I think one of the benefits Solana has compared to other networks is scaling as this monolithic chain. And so the ecosystem has been able to compound over time versus kind of fragmenting across different networks.
And in traditional markets, fragmentation has always been.
Yeah, I mean, look, I mean, I think it's an evolution. So if you look back in time and look at the paper crisis which formed DTCC, really, we are in that early stages. I think we are going to see fragmentation, and we're going to see folks coming back onto the platform and building collectively. I think there's going to be some of that stuff. It's early days, so I suspect that as it relates to the traditional intermediaries in between, their roles will evolve, right? I mean, so a traditional broker-dealer that is custodying may not have to custody anymore. It may be that a transfer agent is no longer needed, but the role of a transfer agent and trust will always remain, perhaps not in the traditional sense that we talk about today.
Yeah. So Mary, if we have 3 minutes to go here, I want to get your thoughts on this. If there, we're talking about Solana constantly evolving, as all blockchain should. What is one improvement that you'd like to see made, or how can it evolve in another way? Or let's say if it's 3 to 6 months from now, it could look completely different.
Yeah, I mean, one of the main focuses, I think, internally for like Solana as a protocol has been on improving transaction sizes, which allow kind of a greater design surface area for protocols to build more complex transactions on chain and do so efficiently. And so that's come up in a number of proposals for Solana, and so would love to see that. And kind of be able to do more and compose with more protocols as well.
Michael, would you agree with that as well?
Yeah.
Efficiency and scalability?
Yeah, absolutely. I mean, there is this internal motto of Solana ecosystem at this point that says increase bandwidth, reduce latency. That just goes around, and that's the mantra of the Solana ecosystem. So I would hope us to both increase the bandwidth, reduce latency, and also introduce more resilience into the system, so that, for example, right now the jump trading, like the firm of the firms when it comes to HFT, is building a second implementation of a Solana client called Fidencer that should be out this year, making the network more resilient, more robust by having multiple client options out there.
And Manish, to wrap up with you here, what would you like to see?
I think speed and efficiency is really important, but I think the ability to sort of interact with the public blockchain and know where the data really resides has to be improved upon. So the ability for a traditional firm to be able to look at all the transactional capabilities, the trades that have taken place, if we can interrogate that very easily, that is a huge improvement for the adoption of public blockchain by institutional players.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.